2:29. We're getting closer to the 2:30 hour. We're going to get started now just to make it easier so we can just get moving. All right, today is Monday, February 27th. It is 2:30 p.m. And we all know that options expired last Friday. And we're doing rather well this year, averaging about 2% per week, which is kind of crazy. And I really don't understand why it's happening, but I have a good indication that it has something to do with the new presidency coming in and the new administration. People or businesses are having a good, positive outlook, and the stock market is just going crazy, for lack of better words. So let's see what we did last week as opposed to what we're going to do today. Now, if you remember last week, we had 14 positions. Okay, today we got assigned one. That means 12 of those positions we made money on. The TJX was a position we had a couple of weeks ago. We made a little bit of money on, and I made an error of selling 100 more shares than I should have. So now I am short 100 shares of TJX, and TJX keeps going up. So I'm just going to leave it open until it actually takes a drop back down. I'm going to show you really quickly what TJX is doing and what it's done in the past year. TJX, so you guys get an idea where I'm coming from. TJX Companies Incorporated, or CM, whatever that is. As you can see by looking at the chart over here on the left, TJX has been going all over the place. She started out 12 months ago at 75.12. Okay, she makes a low at 74.12. Then she shoots on up to 79, drops back down to 75, shoots back up to 78, drops back down to 75, shoots up and hits 78 again, drops back down, hits 72. This thing's like all over the place. Got a low all the way down here of November of last year at 71, and a high way up here at 83. But other than that, she's been all over the place. Now I have TJX, I believe, at 75.5. Let's quickly view the trade. Yeah, see, I'm short. See, I sold 100 shares at 75, so I'm waiting for it to go back below 75 before I lose money, because I don't want to lose any money. I mean, this thing's all over the place. It's going to continue to go all over the place. Most dividend stocks usually stay within a certain range. So I'm not worried too much about that. Now, Bank of America, or BAC, let's put BAC in here. Take a quick look at the chart for that. BAC started last year at $12.80. 12 months ago, it was at $12.80. Now she's at $24.63. That's almost 100% increase in 1 year. That's great. But Bank of America is a weekly paying optionable stock. So what does that mean? It means every 90 days they pay out a dividend. However, you can trade them. You can trade them anytime you want, but for our purposes, I like to trade them for 2 weeks coming into the dividend and to make a little bit of extra money. So Bank of America has its dividend coming up, I believe, next week. So we still have another 10 days, another 5 days for trading this one to make a little bit of money off of them. So we have 2,000 shares at, I believe it's $24.50, and we were off just a tiny bit. Yeah, $24.50. Right now she's at $24.64. So we're going to make a little bit of money off of this one. Let's just show you quickly what it did last week. Okay, zooming in a little bit. You see, last Thursday, this thing was at $24.64. All right, and it had a high of $24.89. Now we had a 24.5 spread. 24.5 spread. It looked like we were going to make somewhere around 30% on that money. However, Friday, for some strange reason, the stock opens up at $24.12, which is like 38 cents below what our target was. And she never actually hit $24.50. So she actually closed for less than our strike price. So we got stuck buying 2,000 shares of Bank of America. So I made a few dollars off of it by selling the half of the spread. You lose money on one side, but you make money on the other. So I got 2,000 shares at 24.5, and right now she's at 24.63. So we could either sell it now and make that 13 cents per share. Or, most likely what I'm going to do is I'm going to give someone else the option of buying it from me for the exact same amount of money I paid for it. So 24.5, I can sell that for 30 cents, 2,000 shares at 30 cents, which is a heck of a lot better than 13 cents. I can collect 13 cents right now if I sold it right now. Or I can collect 30 cents per share right now and give someone the option to buy it from me at $24.50, which is the exact same amount of money I just paid for it this morning. Okay, so I paid for $24.50 this morning, and it's worth $24.63. So, do I take the 13 cents now, or do I take the 30 cents now and let somebody buy it from me on Friday? I'm going to sell it. I'm going to sell the 20 contracts at 30 cents right now. Let's see if it... So that's, it would normally be $600. You see this number right here? Almost $600, but it's cost me $30 to make the trade. So I'm only making $570 off the trade. And there it goes, and there you have it. So it sold at 30 cents. So someone's going to be buying it from me if it stays above $24.50 come this Friday afternoon. All right, so we're going into these the weekly options. Let's take a quick look at what we have up on our list today. We have Tiffany's, Best Buy, Monsanto, and I believe this is Hess. I'm not 100% sure, HES, but I only have 4 weeklies that are up on the list. Now, you would have gotten, if you're part of the membership, you would have gotten this morning. So I'm going to quickly look at these 4 and see what they look like, because it is weekly option day today. So Tiffany's, TIF. Now Tiffany started the year off, 12 months ago at $65.50. She moved up a little bit in April to $74.99. Dropped down somewhere in June to $56.99. Then from there she just kept shooting up till we get to first week of December. And the first week of December, she hit a high of 84. You get some profit taking at the beginning of the year, which brings her down to 76, and now she's at 92. Okay, now 92 is a year's high. Do I want to try and get new highs out of this? No, I don't. Don't get me wrong. Tiffany's may be a great company. It may continue to go. However, let's see what we can do today to make a little bit of money off of Tiffany's for the next couple of days. So she's at, put Tiffany's in here first. All right, there it is. Now she's at 92.09. I can make 15 cents off of this doing the 90.91, which is still, I don't know. That looks like I'm not even, you know what? I'm not even gonna go for this one, because look at these highs. You get it moving sideways here right up until the beginning of February. Then from February, the first week of February, it's at 78. Now she's at 92. Can it keep going that way? I don't know. Do I want to find out? No, I don't. So I'm going to pass on Tiffany's. Sorry. All right, next, BBY, which I believe is Best Buy. BBY. And BBY, put that in here also. All right. All right, let's delete that because we don't want to do that one. All right, BBY 12 months ago was right at 32.46. Basically went sideways for about 6 months. And then right here, 8/22, she closes at 32.80. And then for some strange reason, overnight, she opens up at 38.36. So she jumps from 32 to 38. For what reason? I don't know. I have no idea what reason. Do I care? No, I really don't care. Sorry to sound so strange about that, but I don't. Okay, so you have one gap up here in August. It goes sideways for a couple of months. And then look at this. Right around the election time, she gaps up again from 40 up to 44, which is a 10% move, which is not that bad. So from that 10% move, she makes a high of the year right at 49. Lots of profit taking, looks like profit taking, from 49, the first week of December, down to the first week of January. So that's like a whole month of profit taking, my goodness. All right, then from there, she's been going sideways ever since, and this is where she is now. Can she make higher? Yes, she does, and this actually looks pretty good. So she's at 46 today. So let's do the 45 and a half. Like, you know what? Let's do the 45 and a half. That looks like 19 cent. See the difference between the 31 and the 50? So that'd be 19 cents. Well, let's do 20 contracts of that, just for the fun of it, and let's see what that's going to get us. All right, it's costing me 620, and I'm going to make 680. No, wait. 620. It cost me $60, so it's actually cost me $680 to make this trade. And the maximum amount of money I can make off of it is $380. So that's more than 50%. That looks like a 55 or even a 60% return for 4 days. And to me, that's a no-brainer. So let's send that on its way. Now let me briefly explain to you what I just did. Now I am selling one option and I'm buying the other. Oh, I just got it right there, 31 cents. Okay. Now, this thing, let's quickly go here and BBY. Oops. Let's open up this trade so you see what it looks like. All right. I bought the 45s, okay, and I sold the 45 and a halves. What does that mean? I bought the 45, which is right down here, and I sold the 45s and a half. So I'm going to make close to 55% on this come Friday if this stock stays above 45 and a half. Now, what is my logic here? What is my thinking here? Okay, number one, BBY has its dividend coming up in the next 2 weeks. So that automatically is going to bring in new investors that are looking to, buy to capture the dividend, because a lot of people like getting that solid income. BBY is a good solid company, and over the past 10 years, this thing has gone up, coming into the dividend almost 90% of the time. So it's 90% of the chance I'm going to make 55%. Now, so I can make money in 3 different ways. If the stock goes up, I make money. If the stock stays right where it is, going sideways, not moving up, not moving down, I make money. Now, the stock can even go down. It can go down 57, 50, 56 cents. So it can go down 56 cents over the next 5 days, and I will still make 55%. The only time I'll actually lose money is if this thing drops down below 45.50, right? And if it does drop below 45.50, what am I going to do then? I'm going to turn around next Monday and sell options for someone to purchase it from me for the exact same amount of money I paid for. Therein collecting what is called a, give me a second, covered call, where you own the stock and you sell the rights for someone else to buy it from you for the same amount of money you paid for it. So I'm buying it for $1 and I'm selling it for $1. How much do I make? I make the premium. In this case, I don't know what the premium is because we won't know that until next Monday. All right, that's if the stock goes below 45.50. All right, so we decide we're not going to do Tiffany. BBY looks good. MO, I believe, is Monsanto. So let's take a quick look at MO. MO. Oh, nope. MON is Monsanto. Altria Group. How does Altria Group get MO as a ticker symbol? I don't know. I don't even know if I want to bring this up on the trade because look where it is. It started the year out last year at 61.77, went sideways for a little bit, made the low of the year at 59.67, back in the end of April, shoots up, 69.80. She drops back down to 60, back up, back down. But anyway, she's settling right where she is now at 74.53. Now, don't get me wrong, 74.53 may be great for this company. However, as you see, we got 1, 2, 3, 4, 5, 6, 7, 8 up days in a row. What happens when you have 8 up days in a row? That's right, profit taking. Most time, 8 days in a row, hey, that's a good run. So this thing went from 71. She opened up at 71.72. Now she's at 74.57. That's a pretty good profit taking, for someone who wants to do that. So I'm going to be a little reluctant of jumping in on this one, so I'm going to pass on this one also. And I believe we have one more to look at, and that would be HES. I believe that's Hess. That's a oil company, isn't it? HES, Hess Corporation, correct. All right. Now, this is what I like to see. It's more of an average price. Hess starts out 12 months ago at 43.51. Has a nice upswing to 50. Then she drops back down. Profit taking drops back down to 46. Jumps up to 54. Drops back down to 49. Hits a high of that period for 63. Comes back down. Look at this, all over the place. Gotta love it. This is a very nice looking dividend paying stock, because there's no huge movements, but it is steady and consistent. Up, down, up, down, up, down. Why? I don't know. Don't really care. I just like the movement. The last couple, Tiffany's and the company we just looked at, it was like almost straight up and looking for new highs. Here, we're not looking for new highs. We're chartering into territory we've already been, so it's easier to hit a price you've already hit before. Okay. Where was I? Okay, she's moving all over the place. She hits a high for the year of 65.55, which is the first week of December. I don't know if this is profit taking or just, the way it moves for the year, but let's see what we're doing. So right now she's settled in at 52.89. 52. All right. We could do the 51.5 52s. 37. That would give us 13 cents. Well, we could do the 52.50s. Wait a second. It's a 4-cent spread. I'd rather go for the lower cost. Let's even go further in. Nope, that's too far in. Okay, so 37. Okay, let's do 20 contracts of this also. All right, and let's see what we're going to be doing here. All right. It's costing us $720, $60 in commissions, so we're up to $780, and we're only going to make $280 out of this, which is less than 50%, so it's somewhere around, I'd say 35-40%. Okay, that's just right off the top of my head. So let's look at 35%. So we can make 35% in 4 days if this thing stays where it is. So let's see what we got. Wait a second, that didn't work out right. $20 contracts. I even make mistakes sometimes. Confirm and send. There we go. And send. There it is. 37 cents. Already bought that. Now, let's take a look at Hess. Come on, close that. Close. There you go. Huh. All right, anyway, let's take a look at Hess. Open that trade, take a look at it. All right, so we get the 51.5 and the 52s. Right, no, that's not bad at all. All right, 51.5, 52s is right down here. She's at 52.91, so 52.5 is way down here. All right, again, like the one we did a little bit earlier, this is going to be basically the same. If the stock goes up, we make money. If the stock stays the same, we make money. And if the stock goes down, she can even go down 40 cents. She went down 40 cents, and we're still going to make money off of it. If you only if it goes below 52.50 will we actually lose anything. So up, down, or sideways, we make money on this one. We're only going to make around 35%. So, but 35% for 4 days is not bad. As you can see, we have a few more to do. Not on this one though. Tiffany's, we already looked at that. All right, UNH. Now this is the dividend capturing one here. If you're part of our membership, you can actually get access to these yourself. So look at UNH, see what UNH looks like. UNH. All right, UNH, I don't really like it. All right, so let's go back. Give you a quick little explanation. UNH started out last year at 119, and now she's at 164. That's, a nice steady up climb, going sideways a little bit. You get your profit taking, up climb, profit taking, up climb, profit taking, up climb, a little bit of profit taking, up climb. And now for the past 2 months, 3 months, she's been going sideways. Okay, and she's at basically the high for the year. So she's at the high, and anything we look at is going to be a new high, which means we're going to be venturing on into new territory. Which, do I like to do that? No, I don't. So let's get out of that one and go back. And who's the next? UNH YPF. YPF. Let's take a look at YPF and see what they're looking at. Like YPF. That's in there. All right, this is the one I don't mind looking at. It looks pretty good. It's not a weekly option. It is a monthly option, which means we've got to hold it a little bit longer. She starts out the year at 18.11, drops down to 16.40, shoots on up to 22, drops back down to 16, kind of like all over the place. She makes a low of the year back in the tail end of December. Then from there she shoots up. Can you imagine that going from the tail end of December at 15, jumping all the way up a couple weeks later to 22.75? Now the way she is now going sideways. It's a nice sideways move. Now look at this. You 1, 2, 3, 4, 5 down days in a row, and you have a little bit of support here, which is over the last month. So is she going to hit here? It's going to be the support at 20.50. Let's check it out. YPF. Oh, look at that. YPF does have weeklies. All right, so good. YPF does have weeklies, and we're looking at the 2050s. Now, 45 cents. See, it's not even worth it. Make 5 cents off of that deal? No thanks. How about this one? That ain't worth it either. 35, which is 20. Nope. See, it's not worth it because, see, I'm looking at the 21 and a half, the 20 and a half by the 21, and the stock's at 20.83, which means she has to go up 17 cents for me to just to break even, or me to make any money off of this. And I'm not really making that much. I'm making 15 cents off of it. No thanks. I want it to be in the money, and this isn't. So we're going to pass on this one. That's YPF. If you don't like that one, BBY, we already checked out that one. AVGO. Let's check out AVGO. AVGO. Again, this is one of those I might. All right, I don't like $200 stocks, because if I'm stuck buying 2,000 shares of $200 stocks, that just makes me a little uncomfortable. I don't like that at all. So let's find someone else. LVS. Nice dividend, nice yield. All right, a nice strategy here. Okay, LVS. Oh, Las Vegas Sands Corporation. Should have known that one. Ooh, and I like this. This looks good. Okay, so over the last year, we're looking at starting at 48, jumps on up about a month, it hits 54, has a gap down here at the end of April to settle us in towards the end of June at 41. From there, it's like almost a steady climb. You have your classic profit taking, a few gap ups. Look at this: 1 gap up, 2 gap up, 3 gaps up, 4 gaps up, 5 gaps up, and she hits a high of 63.38. From 63.38, the last 90 days, look at this big drop here. She goes from 62 all the way down to 54. That's a big drop. And she continues going down until we're here. So it looks like we're making a double bottom here. So let's see what we're looking at. I like these gap downs because those usually have a tendency to fill. Is it going to fill in the near future? Probably not. Maybe close, but we'll see. Let's get rid of this. Get rid of confusion. All right, LVS. LVS, that's Sands. All right, so LVS, we have 4 days. Right now we're at 52.80, so that would be the 52.50s. Okay, 16 cents, which could be a little bit on the profitable side. Okay, so let's look at this one. At 52.80 with 30 cents in from the 52.50 mark. It's got its dividend coming up, and that's good. So let's do 20 contracts of that. Let's see what it looks like. All right, it's costing us 680 plus a 60, 740, and that's almost 640. That's less than 50%. So that's like a 45%. So 45% for 4 days is not bad. So let's hit that one. Again, let me briefly explain this one. It'll be the third or fourth time I'm explaining it. All right. We're doing the 52, 52.50. Okay, so the 52. That one didn't go through. Oh, no wonder why. She's working. Huh. All right. 52, 52.50. 52 is way down here. All right, see, 52 is way down here, and 52.50 is way right here. Now, like I said before, this could be, right, this right here could be your double bottom, which could be bouncing off that and going on upwards. Now, we have, in the next 2 weeks, we have the dividend coming out, and the LVS has a tendency to move up coming into the dividend, which is great. We like that idea. All right, it just got filled at 34, which is good. I like that. Okay, so if this stays the same, goes up, or even comes down a little bit, we're going to make 45%. All right, who else are we looking at? All right, we just did LVS. MO, we looked at MO. We didn't do MO, did we? No, we didn't. We didn't like it. BX. All right, let's look at BX. BX all over the place. The Blackstone Group. No idea what they do. All right, Blackstone Group is one of those lovely dividend stocks. Goes sideways. That's kind of like a big channel. You know, not a perfect one, but she starts out being in the year at 25, jumps up to 29, drops 26, up to 28, back down to 26, back up to 29, back down to 24, back up to 27, blah, 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 all over the place. She got the low of the year in July at 22, the high of the year in January at 31. Okay, so the last couple of months, this thing's been going sideways. Look, here we get that double bottom again, here and here. And today's an update, which is a good thing. We got the dividend coming up. So BX may be a contender depending on what the numbers look like. Now BX is at 29.75. That's 46. That's only 4 cents. The difference in the price, 28.5 and 29, is only 50 cents. You take the 50 cents and you subtract the 46 out of it. So I'm buying it for 46, and I only can get 50 for it on a good day. That's not worth my time and effort. Okay, 29.5, which is good. 39, it's 11. All right, that's probably going to be like a 20%. All right, let's take a look at what it is. All right, 840, and we're only getting 220. That's 25%. Do I want to do 25%? Why not? 25% for 4 or 5 days. It's not bad. So I'll do 25%. All right. All right. Next one, BX. We like BX. FCX. Nope, the dividend's not good. All right. If you see the numbers, let's go back there. All right, this is a stock symbol. Here are the dividends. I don't want to chase 7 cents. I don't want to chase 2 cents. It's not worth my time and effort. BX was 47, which is good. And we did that one. So nothing else looks good here. So we're out of here. We're basically done for the day because we don't really have anything else to look at. So those are the weekly optional stocks. You have one strategy here. You have the other strategy here, but both look good. And so what we're looking at, not bad. How many trades do we got? How many trades did we do? We did 1, 2, 3, 4, 5, 6. So we did 6 trades today, and we made 719. Okay, 719 for 6 trades. That's not bad. As you can see, our overall profit and loss is at 30, which out of $100,000 is 30%. Now we're starting our 9th week, and we're at 30%. That's nuts. It took us all year last year just to make, I believe it was 65% we made last year. I don't know. But anyway, we're at 30% now. I'm going to be signing out. This is James from the 10-Minute Trader. Money makes life easier. All that nice fun stuff. We'll catch you the next time.